ladies and gentlemen. My name is Mark Ashagian. I'm a certified public accountant and partner at the firm of the Tax Consultancy Group. And I'm happy to share with you today how does the Senate Republicans' tax plan affect you if you're making $25,000, $75,000, or $175,000 a year. The Senate Republicans and House Republicans have introduced separate tax reform plans. Senate Republicans are racing ahead with their version of the Tax Cuts and Jobs Act. The Senate tax plan differs in significant ways from the versions passed in the House. Currently, there are two different Republican tax reform proposals. The first version was introduced and passed by the House. Senate Republicans have laid out their own proposal, and on Friday, December the 1st vote, they are going to bring it to the full Senate for a possible vote. The two tax plans will have to be reconciled into one before the tax reform can be signed into law by President Donald Trump. We have run numbers to see how the Senate's tax plan would affect a single taxpayer. We've assumed that the taxpayer is childless and will claim the standard deduction in both 2017 and 2018. The estimates that we came up with as to how much a single childless taxpayer at different income levels who claims a standard deduction might save if the Senate's tax bill becomes law are as follows. If you're making a $25,000 salary, the estimated annual tax savings to you is $369. If you're making a $75,000 annual salary, the estimated annual tax savings is $2,129. If you're making a $175,000 a year salary, the estimated annual tax savings to you is $5,240. Our previous calculations using House's tax plan showed slightly lower savings for single childless taxpayers who claimed a standard deduction. For a $25,000 salary, the estimated annual tax savings was $202. For someone earning a $75,000 salary, the estimated annual tax savings was $278, and for a single childless taxpayer earning $175,000, the estimated annual tax savings was $4,289. There are differences between the tax brackets and other details in the Senate and the House tax plans, which will ultimately have to become one plan before tax reform can be enacted. The Senate's bill would allow single filers to deduct $12,000, slightly higher than their current combined $10,400 deduction, which includes standard deduction and one personal exemption. The House's bill proposes a standard deduction of $12,200. Both plans eliminate personal exemptions. According to the most recent IRS analysis of individual tax returns, 70.4% of taxpayers claimed a standard deduction on their tax returns. Single Americans who claimed a standard deduction would be able to reduce their taxable income slightly under both versions of the tax plan, in turn reducing their tax bills. Most Americans will see a slight increase in their take-home pay under the current proposals, but that could change in the future as many of the provisions of this tax plan are set to expire after 2025. Some people believe that nearly half the Americans would see a tax increase at that time. Trump's tax plan, if it passes, will free up a little cash in a typical household's monthly budget, but the biggest winners are likely to be the wealthiest Americans who are poised to save significantly under both proposals. Thank you very much for joining us, and we look forward to answering any possible questions that you may have in this and other subjects related to the taxation. Please contact our professionals at the Tax Consultancy Group with any questions. Thank you very much.